Hi, this is Joseph. Today is Tuesday, and I'm going to talk to you about 3 different trades that we had today with these simple trading strategies. We earned 170 pips. But before I begin showing you these trades, please subscribe to the channel, like the video if you haven't already, comment on the video, and turn on closed captions. Now let's get started. What we're looking at is the euro dollar. This is the 1 hour time frame. This particular trading strategy is called the continuation breakout trade. Basically what I'm doing is identifying a range of consolidation, and it has to be a very specific range of consolidation. I created this trading strategy back in 2001. I've used it ever since. It works on the 1 hour chart, 4 hour chart, daily time frame. Right now I'm just going to show you how it works on the 1 hour time frame. Now what we're doing is, again, looking at or identifying a specific range of consolidation, and that range of consolidation from the high and the low, it has to be a very specific size, meaning from the high and the low, it's got to be like no less than 55 pips. 60 pips, 70 pips is a good range for the breakout. The reason is that if the range is too small and then you get a signal candle where it breaks out like where I'm moving my cursor now, that could sometimes lead to a head fake if it looks like it's a relatively tight range of consolidation. So you can see last week we had a continuation breakout trade, and each one of these trades pays 55 pips from the entry. Again, we had one last week, we had one this week, and it just paid within the last 4 hours. So this one again paid 55 pips. Let me show you the other one that we had here. We had another one here on the dollar Swiss in the opposite direction. So again, we had a continuation breakout trade. Here was my entry. And then there's my 55 pip take profit level again. We really don't have to worry too much about these pullbacks, because generally when we see pullbacks on these breakouts, they're usually testing the area that it breaks out of. And then it resumes that trend and you just kind of leave it alone. And it runs right into that 55 pip target. So between these two, the euro dollar, the dollar Swiss, it paid 55 pips each. Now let me show you the other trade that we had today. This goes back to the HL30. Now many of you have been watching this channel know that I trade this strategy called the HL30 strategy. Now this is the pound dollar, and the HL30 strategy, let me go ahead and get this out of the way because that's not a good warning strategy. This is the HL30. Over here on the left, what we're doing is we're waiting for the rollover period. So here, this dotted line separates yesterday to the start of today. I'm trading off of support and resistance. In this case, based on where price closed, it was at support. I wait for the signal to bounce off of that support level. I use one indicator, and then I get in at that specific location based on the signal, which in this case was 1.3413. I use a 20 pip target. Now, if it hits that 20 pip target, sometimes it'll continue higher and it'll hit the second 20 pip target. So the way we do this is I have to execute 2 trade orders at that time. Now, if you're used to trading, let's say 1 mini lot or 1 standard lot, just cut it in half. So you can have 2 positions open at that time. Now you can see that this developed pretty soon after the rollover. So it's early in the trading day, the start of a new day. Very often it'll set up pretty close to that. Sometimes it'll take a few more hours later. It's not always precisely at the same time. Getting in at 1.3413 means my first target is at 33. My second target is going to be at 53. I set that first open trade at that first target, and when it hits that first target, it's closed out. I bank 20 pips. The second open order, I then change the stop loss to a break-even stop loss so I can protect my profits. And then if it continues higher, it runs into that 53. Now, that second trade, that second position, it goes from 13, the entry of 1.3413, to 1.3453 for a total of 40 pips on that second position. So effectively, between these 2 positions, I've earned 60 pips. So I earned 60 pips this morning on the pound dollar, and then I earned the 55 pips on the euro dollar breakout trade and 55 pips on the dollar Swiss breakout trade for a total of 170 pips today. Super easy, super clean. Now, none of these trades set up on any of the other major currency pairs. They just simply didn't give me a signal, so I didn't execute them. Because you might be wondering, what about your losses? I don't have any losses because I don't execute if the signal isn't appropriate. In other words, the conditions. I have to have 100% confirmation before I get into the trade, or I will not take the trade. I know it's a big challenge for a lot of people. When I first started trading back in 2001, I had lost so much money, I was taking any trade, even if it was risky, because I was hoping that it would give me some profits and I would earn back some of my losses. But it doesn't work that way. Don't do it. Has to be a picture-perfect setup, or I will not execute the trade. I've been doing this for more than 20 years, and it gets a lot easier the more you do it to be able to stick to your plan and to exercise that discipline. So 170 pips today. If you want to learn how to trade like this, if you want to learn this system, you can go to my website, forexdaytradingacademy.com, and you can learn more about my trading strategies.